Metals. Mr. Schiff, thank you so much for joining us today on USAWatchdog.com.
Well, thanks for having me on, the Watchdog.
Well, you're going to be taking a little victory lap here because I went back and I actually transcribed the bite. This was an off-the-cuff question I asked you. One of my main questions, I just said, hey, what do you think about, the Fed, chief battle going on between Janet Yellen and Larry Summers? And when I asked you about it, I said, who do you think is going to get the job? And you said, I quote, as much as I don't like Summers, Yellen is even worse. That's why I think Obama will go with Yellen, the worst possible Fed chairman. Now, that's the best thing that could happen for gold and silver if you don't care about the country. I care about the country. I really wish it wouldn't happen. That's more of what you said. But that's the best thing, the most bullish thing that could happen for gold and silver. And lo and behold, last week, Janet Yellen got the job, even though everybody thought Summers was going to get the job. What do you think about Janet Yellen as the Fed chief? I know you think she's bad.
Yeah.
And what is she facing?
Well, first of all, last week's announcement didn't really surprise anybody because Summers had already bowed out of the race. So
right. But when you said that, he had not bowed. He was one of the leading candidates.
I said that a long time ago, but nobody was surprised last week when Yellen was nominated because at this point, with Summers out of the race, it was almost a foregone conclusion. But, I still believe that Yellen heading the Fed is very bullish for gold, even though the price of gold has gone straight down since Yellen was announced. I think the bigger factor is Goldman Sachs coming out and saying it's a slam dunk sell if we resolve the budget crisis the day before the Republicans cave in and basically say we're going to raise the debt ceiling, no strings attached. And basically Obama wins. They're not going to spin it that way, but it seems obvious that now the phony crisis has been diffused. But, gold, the debt ceiling crisis was never a crisis where you would want to buy gold if you believed that we were not going to raise the ceiling and you believed we might default, because a limit to government debt, a limit to the growth of government is bad for gold. What's good for gold is raising the debt ceiling. What's good for gold is more borrowing, more money printing, right? More inflation. So contrary to what Goldman Sachs says, it's a slam dunk buy because we have succeeded in increasing the debt ceiling. But the lemmings don't understand this. So you have a lot of speculators doing what Goldman Sachs is publicly encouraging people to do, although what they're doing privately may be the opposite of what they're encouraging people to do. That's kind of how they operate. But, also on Janet Yellen, you'll notice there's a media campaign out there to try to rewrite history and cast Janet Yellen as the one voice of sanity on the Fed, the one person who saw what nobody else saw, warning about the housing bubble, warning about the impending financial crisis, and for some reason nobody listened to her warnings. Well, it's all BS. None of it is true. Janet Yellen was just as clueless and as blind as everybody else. In fact, she admitted it herself in 2010. But, you've got all these, the New York Times and all these newspapers and reporters, left-wing liberal reporters, taking this false narrative and just, it's almost like that game of a telephone where you tell a lie to somebody else and then they tell a lie. And, now you think she was Nostradamus. She had a crystal ball, she was Cassandra, all kinds of stuff. And I'm producing a video blog, a special Schiff Report video blog. I'm actually going to go back to the speeches that she gave in 2005 and 2006, where the housing market was discussed. And these are the exact speeches that the left are using to validate the fact that she saw the crisis coming and warned about it. And in fact, when you actually look at what she said, she did nothing of the sort. If anything, she talked about concerns other people had about the housing bubble, and then she argued why they were wrong to worry about it.
Let me read the 2010 quote that you're talking about, because this is in my weekly news wrap-up. She said, when asked about the biggest meltdown since the Great Depression, and likely it'll be bigger than the Great Depression, she said, quote, I didn't see any of that coming until it happened. That's her direct quote, Janet Yellen, in 2010, and it's widely publicized on many different sites. She was talking to the FDIC at the time she said that. So she didn't see it coming. She didn't understand about the securitization, what kind of problems there were, any of that stuff.
She went into all the details, subprime, rating agencies, the structured products. She said we were clueless. I had no idea. So she admitted herself. But my point is, when you go back and read what she said in 2005 and 2006, which I'm doing on my video blog, but if you go and read it, not only was she not warning about the housing bubble, she was trying to quiet some of the concerns that other people had by saying, hey, there are some people who are worried, but really we shouldn't worry. So it was worse than just, ignoring it. She identified that there was potential talk of a housing bubble, but then said, hey, don't worry about it. And she even talked about the fact that if she was wrong and there was a bubble, even if it burst, that it wouldn't hurt the economy. So she was clueless any way she looked at it. But I suppose just talking about there's a housing bubble, even if it's to deny it or to say that it's not a worry, I guess that qualifies you, as far as the left is concerned, as being the smartest member of the Fed. That shows you how low the bar is when it comes to, who they want to give credit to. But, of course, the New York Times will never give credit to me for predicting the financial crisis or the housing bubble, even though there's ample evidence that I was actually warning about the crisis in 05 and 06.
You wrote books about it.
Yeah, but I was doing exactly what they're now crediting Janet Yellen for doing, and she didn't do any of it. And if they ever talk about my having predicted anything, they'll always preface it. Whenever the mainstream media wants to talk about me and the housing bubble or the financial crisis, they'll say Peter Schiff, who claims to have called the crisis, or Peter Schiff, who says he predicted it. They'll never actually credit me for doing it. They always want to qualify it to kind of say, well, he really didn't do it. He's just making it up. He said, but when it comes to Janet Yellen, even though Yellen denies, even though she comes out and says, I didn't see anything coming, I predicted nothing, immediately she predicted it. She called it. Man, she's a genius. If only we had Janet Yellen sooner, we wouldn't have had a housing bubble. We wouldn't have had a financial crisis. It would have been worse probably if Janet Yellen were in charge instead of Ben Bernanke, if you can imagine that.
Well, I was at CNN when you were making these come out with your book. I was at CNN, and I thought, who is this Peter Schiff dude? I mean, he's saying the opposite of everybody else. And I was trying to put some of that stuff on the air. I was putting that stuff on the air. I didn't get you on the air, but I got John Williams, I got Jim Sinclair. They were all talking about how terrible things were, that we don't have a recovery, that we are already in a recession. Anyway, I want to get back to gold. You're saying that, Goldman Sachs is saying sell gold, and you're saying buy gold. Well, China, the country of China, it was reported last week that they imported 846 tons of gold in the first 8 months of the year. That's more than 100 tons a month. And they keep all their mine production. I think that's about a quarter of the mining production that China's importing.
They're going to buy all the gold we're dumb enough to sell. Let the speculators unload their gold because they think the crisis is over. We're not raising the debt ceiling. The crisis is not about failing to raise the debt ceiling. It's about succeeding. It's about more debt, more money printing. People are worried about default. Now we're not going to default. Default is inevitable, not because of the debt ceiling. We're going to raise that. Indefinitely. We'll borrow as much money as the world is dumb enough to lend us. It's the lending ceiling. When foreigners won't lend us any more money, or even Americans don't want to buy treasuries anymore, then the government has to default. Either that or they have to inflate. And inflation is worse. When you repudiate your debt by destroying the value of the currency, that's worse for everybody, especially the creditors, than an honest restructuring, an honest default where you admit you're broke and offer to pay less than 100 cents on the dollar, because at least the money that you pay will have some value. If you pay off 100 cents on the dollar and the money is worthless, then it doesn't matter. And it's not just the bondholders who are going to get wiped out. It's anybody the government has promised to pay, whether you're waiting for Social Security or a government pension, or whatever it is. And it's not just that money. If you have money in the bank, if you've got the cash value in your insurance policy, if you've got a fixed annuity, all of these dollar-denominated assets get destroyed when the government is forced to repudiate through inflation. And hey, real quick too, on the Janet Yellen housing bubble, if you actually want to see what it was like when I was warning people about the housing bubble back in 06, when Janet Yellen was clueless and everybody is now trying to claim, she was sounding the alarm, go on to YouTube and go to Peter Schiff Mortgage Bankers and watch the presentation I gave. That was typical of the stuff I was saying about the housing market in 06, 05, 04. This one is from mid-06. but it's over an hour presentation in front of 3,000 mortgage bankers. So I went into the lion's den to tell these mortgage bankers that they were about to go broke. In fact, I remember one of the things I was joking about was that I thought that in a year or two, they'd be able to have the whole convention in my hotel room. They had 3,000 people in this big hall. But that's what a real warning sounds like. Watch that hour presentation and then compare it to anything that Janet Yellen said in 2005 or 6, which I'm going to do myself, by the way, in this YouTube video. And if you want to make sure and see my YouTube video, you go and sign up at my YouTube channel at Schiff Report, because that's where I'm going to be posting the video blog when I finish doing it. I want to record it and edit it and make it look nice.
You clearly nailed it. I clearly, I don't even have to have you prove it. I know you did it. Speaking of mortgage bankers, Wells Fargo is another bank that has announced another big layoff in their mortgage division, another 1,800 people. That goes with J.P. Morgan and other banks that are laying people off in their mortgage division. And I thought we had a housing comeback. What's going on?
Nope. In fact, the speculators piled into houses in the last year or so. Hedge funds, private equity guys, they ran in, they overpaid for prices, they drove up the market, and now they're loaded up and the bottom's going to drop out. The Fed had to pull back from its supposed taper talk because mortgage rates went up, but they're going to keep on going up. Meanwhile, the FHA is already starting to lose money. They have huge losses now on these insured mortgages. The reverse mortgages, in fact, are going to come back to really bite us because the court just came out and made a ruling that says that if an old man took out a reverse mortgage, but he was married to a young woman, even though that young woman wasn't on the mortgage, she can stay in the house until she dies, which may be another 30 or 40 years. This is going to cost taxpayers billions, maybe tens or hundreds of billions of dollars in insured losses off of these mortgages that never should have been written and never would have been written absent a government guarantee. But the lender is guaranteed to get all their interest back, all their principal back, and the taxpayer is going to be caught holding the bag when we eventually get the housing collateral back years, decades in the future, when it's nothing but a teardown. Meanwhile, the bill is going to be huge due to all the compounded interest.
I want to talk to you about what Jack Lew said last week. He said that the damage, even if they get a debt deal done, and I think they will, but he says the damage to interest rates have already been done. And that interest rates are already going up. And, we had a 300-point day last week on the Dow. And is he trying to continue blaming the Republicans for an already rising interest rate environment, or am I crazy?
Interest rates were already rising. In fact, they haven't risen at all, at least on the long end. Some of the very short rates, the 30-day to 60-day paper jumped up a bit. But the long end of the curve hasn't moved at all. So we haven't been penalized. That's because the creditors are clueless. But what really should cause people not to want to own our bonds is the stuff that Lou is saying. When he's saying we're going to default, when he's saying if we don't raise the debt ceiling, we're going to default, he is warning our bondholders to get rid of that paper. He's telling them that default is inevitable eventually, because eventually we're not going to be able to borrow more money, because we're not going to be able to convince the lenders to lend it to us at low terms. And basically what Jack Lew is saying is we can't prioritize the bondholders. We can't cut spending on the military or on Social Security to pay off our bonds. We can't raise taxes to pay off our bonds. Well, if you're not willing to do any of that to pay off the bonds, why buy the bonds? Why would anybody be dumb enough to buy these bonds and collect a low rate of interest when the U.S. government says, look, we're probably going to default at some point. We might not do it now, but we're probably going to do it later. That's basically what he's saying.
A final question, which just maybe dovetail into all these countries with yuan swaps with India and Russia, and now China. It was just announced in one of many publications, the Bangkok Post, but it's fairly widely reported that China has just set up a currency swap with the European Union. This is the number 2 economy in the world, China, setting up the biggest trading bloc with about a $57 billion to start. Yuan euro swap. What does that do for the dollar? I think it's a bad sign, but you're a manager of billions of dollars, and have billions of dollars under your control. What does that tell you about this new deal?
I mean, it doesn't tell me anything that I don't already know, but the world is preparing itself, weaning itself from the dollar. and you'll see more and more of these bilateral trade agreements that don't involve the dollar, that circumvent using dollars as a medium of exchange between countries, among nations, when they're invoicing each other for the goods and services that they're trading. And so all of this is preparing for the day when the dollar is no longer the world reserve currency. So the world doesn't want to be completely shocked when it happens. They want to prepare so it's not just going cold turkey, that they're gradually weaning themselves off of the dollar and replacing it with other currencies. So obviously this deal involving the euro is beneficial for the euro, ultimately detrimental to the dollar. But what's destroying the dollar is America. It's our monetary and fiscal policy, not these deals. These deals are our reaction to what we're doing in anticipation of what is going to happen to the dollar so that trade can continue without having it all screwed up by the collapsing dollar when now you don't even know what anything is priced at. It's going to be very difficult in the future to have contracts in dollars because the dollar's value is going to be declining so much, so rapidly that people aren't going to want to contract in it because they might be afraid they'll be on the wrong side of the move.
What about a final question here? What about gold and silver? I mean, a lot of, it's been going down, as you said, since Yellen was nominated. But, there's many people that think it's all about the possession and that big players like China and Russia and other countries are acquiring gold by the ton, hundreds of tons. And is that what normal people should do? Just start dollar cost averaging into the decline, or what do you say to people that say, I bought gold at 1,600 and it's down to 12 something? What do you say to people like that?
I'm doing that myself. I'm buying more mining stocks. I bought more today. I mean, I bought yesterday. I mean, I buy. The market's coming down, and if it keeps coming down, I will continue to buy. That's what I encourage people to do. I'm not, all levered up. I'm not buying options, so time is not my enemy here. I don't have to time it perfectly. And, I've bought, when it comes to gold and gold stocks, I mean, I've bought all the major dips over the last 10 or 12 years. And I've had huge rallies. Now, I haven't sold those rallies, so you can fault me for not having sold the rallies and then bought everything back. But I never buy the rallies. I buy the dips, and then when the market goes up, I kind of sit back. And if it keeps going up, well, I've got a position. But if I get fortunate enough to be able to load up even more, that's what I do. And so when they're giving them away, I buy them, and then I kind of back off. But one of these days, it's not just going to go up a little, or, gold stocks aren't just going to triple. They could go up 10-fold, 30-fold, 100-fold, who knows? So ultimately, I think this trading range we've been in these mining stocks over the last decade is ultimately going to barely be noticeable, even though it's huge looking at it from where we are right now, where you get these big increases where you see prices go way up and way down, and you see a big difference between the lows and the highs. I think in the long term, the lows and the highs of the last decade, it's going to be hard to see them on a monthly chart when you look at where we're going to be. So I think you just got to, accumulate what you can. Trade it if you want. I see the opportunities there. Some people you can have a core position and then you can have a trading position. But right now, whether it's for a core or for a trade, to me, it seems like now's the time to buy. I don't know where the exact bottom is, but I think we're bottoming. I think we've been bottoming for a while. I think we're going to have another huge rally, and I'm sure, I'll probably ignore it and I won't sell again. But there will probably be an opportunity for the traders to take a good profit. Maybe they'll get a chance to load the boat up again. Maybe there'll be another big sell-off, or maybe there won't. Maybe it'll just go straight up, and the people who sold will never get to buy their stocks back, and they'll be stuck with dollars. And, in a way, even if you double or triple your dollars because you trade the gold market, if the dollar collapses, it doesn't really matter. Let's say having $100,000 or having $300,000, it may not matter. It may be the difference between buying one cup of coffee and buying three. So at the end, it doesn't really matter that you made that money because it doesn't have much value. So I would rather hold on to the stocks or gold, knowing that we're facing a potential dollar collapse, and that is what the risk that I want to protect myself from.
One of your compadres, your other hedge fund guys, Kyle Bass, thinks the ultimate conclusion is a collapse. What does America look like? This is my last question. What does America look like in a collapse for people who are holding dollars, who are holding treasury bonds, who are holding pensions? What does it look like?
Yeah. A lot of it depends on the nature of the collapse. I mean, is it an inflationary collapse? Is it hyperinflation because we never do the right thing? Or is it a deflationary collapse because we eventually do the right thing and slam on the brakes and bring about the collapse ourselves rather than just, drowning in it through inflation?
Well, let's say it's inflationary.
Either way,
that's what it looks like we're going to get.
But either way, the American standard of living is going to move dramatically lower. The cost of all the goods that we routinely buy, a lot of it, of course, we buy on credit, but the price is going to rise so dramatically that it's going to be beyond the reach of most Americans. And, right now you've got Americans get a brand new cell phone every year or two. That's going to stop. The cell phone they have, when the collapse happens, that's the last cell phone they might have that cell phone for the rest of their life, and then they'll leave it to their kids, in their will. We're not going to be buying a bunch of new things because stuff is going to be very expensive. Americans are going to start fixing things again. Some Americans might have to learn how to sew. So you can repair clothing items and you can, alter them as you hand them down so we're not going to be the throwaway society anymore because we're not going to be able to afford to buy those things. And if we have them, we're certainly not going to throw them away, not with the cost of replacing them. A lot of people who are not working in America today are going to have to get jobs, whether it's because they're retired and they're going to have to get jobs because their pensions or their Social Security benefits can no longer put food on the table, or because they're living off the government right now, they're on welfare, and that's not going to be sufficient, or food stamp. People are going to have to start working. What are they going to do? Where are they going to work? It's going to be very difficult, especially if we maintain all the regulations and taxes we have now. So, maybe this could be a good thing if we recognize what brought about our destruction. If it results in, that moment of reflection where we can realize that it was the well-intentioned, socialists in the Republican and Democratic Party. It was all these government programs, all these do-gooders that did us in. That the Founding Fathers had it right. That limited government works. That the government that governs best does govern least. We need sound money, right? We need a real free market. We need to start repealing all these rules and regulations that we've piled on over the last 50 to 100 years. Get rid of them all. Get rid of these taxes. Get rid of these programs. Shrink government back down to size so that it's no more than 5 to 10% of GDP. Total, all levels, state, federal, and local. And then free up the economy. That's what we're going to need to recreate what the government has destroyed. And it took generations for the government to destroy what we created. And we've been living more recently on credit. We've been able to maintain the trappings of wealth, even though what produced our wealth has already been destroyed. And so this is just a question of time until the illusion is pierced. And when the collapse happens, that's it. The party's over. America is going to have to live within its means. That's something we haven't done in a long time. And we have no idea how much our means have been diminished since we began living beyond them. So it's going to be a rude awakening for a lot of people. But again, I hope the blame is put where the blame belongs, on government, not on capitalism and freedom. Because if that's the route we go down, then it's going to be a whole lot worse. And then maybe the only thing that you could do is leave. Get out of the country, go someplace else, because they will make it like a hell on earth. If we go all in on government, if we become a giant socialist state, because we believe that capitalism has completely failed and we have to turn everything over to government, all the property, let them make all the decisions, let them set all the prices, allocate all the resources, create all the jobs, and we turn it into, a Soviet Union or a Cuba or something like that. And, you're not going to want to live here, or it's like another East Germany. That's why, when I was running for Senate and my opponents used to talk about building a wall, on the Mexican border to keep the Mexicans out. The main reason that I said I was opposed to building that wall is because I was afraid that they would eventually use it to keep the Americans in.